Okay, have you ever watched a stock just defy gravity? I mean, shoot up to unbelievable heights in just a few days? Well, today we're putting on our detective hats. We're going to deconstruct the absolutely wild, parabolic surge of a stock called COOT and figure out what was really going on behind the scenes.
And our investigation starts with this one single number, 85.9 million. That is the number of shares that changed hands in one single frantic day of trading. You know, a volume that huge is like a giant flashing neon sign telling you that something really extraordinary is happening here.
And right away, that leads us to the big question, right? What causes this kind of frenzy? Are we looking at the birth of some revolutionary company, a once-in-a-lifetime opportunity? Or are we all just staring into a massive, dangerous bubble that's just seconds away from popping? Let's dig in and follow the clues together.
So every good mystery starts by setting the scene. First, we need to get a handle on the timeline of this price explosion. You know, from how it started to its really dramatic climax.
Now, what's really wild about this is just the speed of it all. I mean, all through August, COOT was just this sleepy little stock puttering along below 60 cents. Then, boom, a little flicker of life in late August. But early October, that's when the rocket really ignited and went completely parabolic. The whole story hits this fever pitch on October 14th, when it spikes to a high of 118, only to close way lower. That right there is a classic sign of a massive battle between the bulls and the bears.
Yeah, let's just try to wrap our heads around that one day. Imagine your investment jumping almost 50% in just a few hours. That's the dream, right? But then imagine watching it drop 40% from that brand new peak before the closing bell even rings. I mean, that kind of extreme whiplash shows you both the incredible buying frenzy and that first big wave of people cashing out their profits.
You know, if you want to understand where a stock price might be headed, you first have to understand the crowd. So for our first clue, we're going to do what they always say, follow the money. And looking at the trading volume, well, it tells a really powerful story.
And this just lays it out perfectly. This stock went from being on a quiet little side street, trading less than 500,000 shares a day, to a full-on stampede. On that peak day, the volume just exploded to 170 times its average. Look, this isn't just interest. This is a speculative mania, with everybody trying to rush through the exact same door at the exact same time.
All right, on to our second clue. I want you to think of a stock's technical indicators like the dashboard in your car. They tell you if the engine's running smooth or if it's about to overheat and blow. And in COOT's case, well, we've got several warning lights flashing bright red.
The main warning light that's on is a condition called overbought. Now, it sounds technical, but the idea is actually really simple. It just means the stock has gone up way too high, way too fast, and the basic laws of financial gravity are probably going to pull it back down to a more sensible level.
But here's the key. It's not just one warning light. We've got a whole cluster of them. The money flow index, the MFI, is at 99.5 out of 100. I mean, that's a completely unsustainable buying frenzy. The CCI is at a level that's historically extreme. Even the ADX, which just confirms how powerful the trend is screaming that it's in extreme territory. The entire dashboard is telling us this engine is redlining.
And that brings us to our final clue, which really ties this all together. It's all about distance. How far has the stock's price pulled away from its own historical average? Think of it like a rocket pulling away from Earth's gravity. You know, the further it gets, the more and more energy it needs just to keep going.
You can see the gap so clearly here. The stock closed up near 97 cents, but its recent normal, its 50-day average, is way down around 59 cents. That is a massive disconnect. The price has become totally detached from its own recent history, and that is often the perfect setup for a very sharp snapback to reality. And here's the number that puts a fine point on that disconnect. The price is stretched over 42% away from its statistical trend line. It's like a rubber band that's been pulled way too far. And we all know what happens when you let go of a rubber band like that.
Okay, so we've gathered our clues. We've got the parabolic chart, the insane volume, all those flashing red indicators, and this extreme separation from the average. Now it's time for the verdict. What does all this evidence tell us is likely to happen next?
Well, based on how the analysts are reading the tea leaves, a correction is the most likely scenario, with about a 60% chance. And that just means a pullback in the price. Consolidation, basically trading sideways for a while, has about a 30% chance. And the chance that this crazy rally just picks up and keeps going? Only about 10%. The odds are clearly heavily stacked against new buyers at these levels. So what should we be watching for now? Well, the key battlegrounds are these price levels. The ceiling, or what we call resistance, is right at that psychological $1 mark. And of course, the recent high of 118. But really, the more important level to watch is the floor, or support. If the price breaks down below 90 cents, that could trigger a much faster sell-off, maybe down towards 82 or even 75 cents.
So let's put it all together. What is our final verdict on this wild COOT stock surge?
Here's the bottom line. This rally is deeply speculative and just dangerously overextended. All the clues are pointing to a likely and probably imminent correction. For anyone thinking about jumping in right now, the risk of a sharp drop just seems to far outweigh the potential for more gains. The main message from all this data is simply caution. In fact, extreme caution.
And that leaves us with this final, really thought-provoking question. Is this whole frenzy the market correctly identifying some kind of fundamental shift in the value of agricultural companies, or is it just the latest example of a classic speculative bubble, fueled by pure hype and destined to pop? The clues certainly suggest the second one, but hey, only time is going to write the final chapter to this story.